Hey, good morning, guys. Mike, aka Crypto Jewels. It is 4:30 Friday morning. We're going to do a quick Bitcoin update from yesterday. We've got a little bit of price action that's unfolded since the last video, which we had kind of anticipated this move. So let's kind of give a real quick overview of what I think is going on. I'm not going to dive into the higher time frame by any means. But looks like we've got a one wave up, in my opinion, possibly a WXY working down right now. And we are potentially on the A, B, C, B wave of the WXY. I'm sorry, of the Y wave. You've got your W, X, A, B, and then your C. So that C wave currently looks like it is potentially just putting in a one wave as this impulsive 1, 2, 3, 4, 5 here. Let's zoom in a little bit so you guys can see it. So we possibly have this 1, 2, 3, 4, 5 to put in our 1, and then we can anticipate roughly a 50% to 618 retracement of this entire wave for our 2 wave, which would really put us rejecting anywhere from 27,475 to 27,706, and that is currently projecting down. From there, you would have this 1, 2, 3, 4, 5, and then putting in our 2 wave, and then moving impulsively from there into our 3 wave, which would take us, likely well over $40,000. So that is currently the impulsive target. If we are indeed moving impulsively downwards, that 3 wave is currently targeting right around 50% retracement at 24,644 or so. And our 5 wave is targeting roughly 24,000. So as we talked about yesterday, all of our targets are pretty well lining up between the 50% and 618% retracement, 61.8% retracement of our wave 1, which is an ideal retracement spot for wave 2. So all of that is looking pretty good and lining up well with our current expectations of the way our price is moving and how we are currently unfolding. As we mentioned yesterday, there is possibility that this is still really a leading diagonal and that this was just a WXY with our bottom in here. And then this is a leading diagonal with a 1, 2. This would be an ABC for our 3. And then from there, you would have an ABC for your 4, and then an ABC for your 5, which would again have to break above the top. Oh, sorry. Nope. Then you would have a retrace down and then break above the top of your 5th wave. That would signify that the bottom is in and that we did bottom in this WXY here. And then we had a 1 wave as a leading diagonal. I really hope we don't get that just because that would be, again, very frustrating, choppy, boring, and not conducive for traders to try to trade that chop. So I would really prefer, obviously, just to get this flush down and then get an impulse on the micro time frame off of the low, wherever that may be. And then we can really start to get good targets, good accurate targets for trading purposes and for larger degree swing trades as to where we think we can top on a 3 wave of this entire structure down here. So the other scenario that we've got in play is that this is a WXY and that this is actually just an A wave, which would be, you know, an A, a B, and then potentially a C, which could target anywhere from the 1.0 extension to 1236, which would not technically reach our 50% retracement, but in Bitcoin we do see extended zigzags, which could go all the way to 1618, which happens to be just a hair below the 50% retracement at 24,455. So again, we are still getting a lot of confluence in that area, in the 50% to 618% retracement area of our wave one. So, you know, regardless of how this ends up unfolding, you know, for those of you guys who have been watching these video updates that I've been doing daily, have known that this entire structure has morphed several times, which is indicative of a corrective structure in Elliott wave. Corrective waves are, you know, not reliable compared to an impulse wave. They're very difficult to manage and to determine exactly what they're going to do. You really don't know exactly what a corrective wave is going to do until it's over, and then you can go back in hindsight and say, okay, here's what it ended up doing. This was a WXY, this was an ABC, you know, whatever, which is a good exercise to do from an educational standpoint, which is what I like to do as well. That way I can, you know, at least try my best to, you know, go back and look to see, you know, maybe what I missed in hindsight. But, you know, then again, the market is never going to be exactly the same and never going to do the exact same thing. You know, structures obviously can rhyme with each other, but they're never going to be identical. But either way, I think that we have navigated this choppy, nasty corrective structure fairly well. You know, sometimes it didn't do exactly what we had anticipated it doing, but it ended up doing, you know, what our alternate count was. So, you know, everything that this has done, for example, when we were in this structure here, you know, I thought that this was going to be our one wave down of our fifth wave, and we were going to impulse, you know, down to finish and then go back up. That didn't happen, and the alternate count was that we would end up running the high, you know, wick down below and then get rejected and then finish our impulse, which is currently what we are getting. So, you know, I think, again, I think we've navigated this pretty well, given the nature of the corrective choppiness of what's happening here. And we will continue to do so as we move forward. So hopefully this helps you guys. This is really more of an educational piece than anything else. You know, just trying to help you guys learn Elliott wave and understand the way these things can potentially move, and also to understand that there's no definitive and there's no you don't marry a bias whatsoever. You know, if you start to marry your bias, then you're destined to lose, because you're just going to hang on to it until you end up, you know, exiting a position at a bad spot. So, all right, that's it for me. I will do another update, you know, likely as price action unfolds throughout the rest of the day. See y'all later.